It can be really frustrating to keep getting beaten out by cash offers when you're trying to buy a house. Not everyone can write a check for several $100,000 and just call it a day. Today, I'm talking to Tonya Sample at New American Funding about their loan program that allows your offer to appear as a cash offer for a house, and it avoids contingencies. I'm Schumann. I'm a realtor here in the Twin Cities, and I make videos to help buyers and sellers make smart decisions about real estate. My contact information is down below this video. If you tap the title on a mobile device, that will pop right open for you. And if you're interested in having a conversation with Tonya about this program, you can find her information down there, as well as a free download with some details about it. So let's talk to Tonya. So what I would like to talk about is contingency, right? Like the whole, so cash versus conventional, they're still going to get the same amount of money, the seller, right?
Yes.
That doesn't change the price.
Change anything. Right.
But what it does change is the remote chance that somebody's going to not be able to and maybe it's not so remote. Maybe I'm just been lucky with my clients that we haven't had a problem where financing fell through.
Right.
So, but I do see it on the MLS where people are like, this is back on the market because financing fell through. So let's start off with the fact. So you mentioned before that there's not a lot of inventory and there are a lot of buyers and interest rates are low, and that's like really driving demand, even though they're starting to go up, right?
Yep.
Look at you messing around with your background.
But you're not, we're not gonna, this isn't it, right?
Well, it could be part of it. It's okay though. We'll leave it in anyway. But the point being that every house that's on the market does get multiple offers. I mean, I think the statistic that I heard last week was that there was a 15% offer acceptance rate, which means 85% of people that offered on a house last week did not get a home. Yeah. 15% did. But if that holds, that means that every person needs to put in 6 to 7 offers before they're going to find one that accepts them. And that's just an average, not necessarily that you put in 7 offers and your 8th one's going to work. I mean, it's got to be good. So I think over that time period of 6 to 7 offers, you start to figure out, oh, this is what it takes for me to win in an offer. And now I'm willing to do it because I've been rejected so many times. And one of the things that we're seeing is a lot of people with a lot of cash are coming in and saying, like, I don't need to worry about financing. So, hey, seller, maybe I might ask you for an inspection. Maybe I won't. But that's one contingency that you're not going to have to worry about with me because I'm just going to write you a check. Yep. So most people are not in a position to be able to spend $400,000 like out of their bank account. So if you wanted to eliminate that as a potential argument from a seller, your program is actually designed to do that, right? This is what we're talking about. So Tanya's gonna, and I didn't give the introduction, but I'm talking to Tonya at New American Funding, and she told me about a program of hers where this is where we can eliminate one of these contingencies, which is the financing contingency if you're putting an offer on a property. So why don't you tell us what that program is,
Sure.
who it applies to, why you would use it, etc.
Yep. Okay. So I'm Tonya Sample with New American Funding.
Thank you for introducing yourself.
Hey. Hi, Mary. What we've done at New American Funding is rolled out a cash buyer program. We call it the Buyer Accept Program. So essentially what I'm doing is, in this market with such limited inventory, we are seeing financed offers get accepted. We're also seeing cash offers get accepted. So what you were mentioning about, a seller being presented with a side-by-side financed and cash buyer, if it were apples to apples, whatever that offer was, typically they may lean more toward that cash buyer, because what it does is it takes out some of the layers of the financing. Usually
So
cash buyers, go ahead.
let's talk about that, because that's one thing I didn't say, right? Like, one of the things I'm constantly talking to my buyers about is, if you're financing, you're going to have to come up with the difference between an appraisal number and what you offer. So
Right.
let's talk about that.
Yeah, and you're still going to have that. I mean, really, you're still going to have this, because essentially what the person's doing is they're just borrowing New American Funding's cash. So they're borrowing their cash. In the end, they're still going to finance. So when it comes to that financing piece, so there's a thing called an appraisal waiver. So unless we get an appraisal waiver on the finance piece, we still have to have an appraisal. So we're not going to be able to go gangbusters if we don't have the means to be able to back that up. So, and what I mean by that is, let's say that we're purchasing a $400,000 property. It's listed at $400,000, and we decide we want to offer them $465 in order to be competitive. Well, we need to be considerate of the appraisal. Are we going to have an issue at that $465? Maybe we, and it's okay to say that, hey, yeah, we're a cash buyer, but we're still getting an appraisal done, because the goal is we still want to have financing on this home. And most cash buyers do. A lot of cash buyers, whenever they pull that from their, let's say, their stocks or whatever, they go and they cash out, refinance later, paying a higher interest rate, so that they can be ahead of the competition with their cash offers. So you're seeing a lot of those cash buyers have the cash money available, but they end up closing with financing anyway.
A cash buyer can show, I have the funds to pay for it.
Yep.
They still can finance it, even ahead of the purchase, right?
Yes.
Because if financing falls through, they just have to write the check, because that's what they've written in the contract. So
who it applies to, I'll give you two primary examples of what I've been seeing most recently, because there's a lot of different scenarios we could use. But one is somebody that currently owns their home, not free and clear. Maybe they have a mortgage on it, but they own their home and they don't want to be contingent on selling their home to buy their next one. Well, now this bridges that piece of it. So we're allowing them to pay cash for their new property. They then can go and list their current home. Once that sells, then we can close on the financing on that cash loan that they have with us. A lot of our first-time home buyers are struggling in the price point that they are qualified and eligible in, struggling against more cash buyers. So this now makes them more of an equal to them. And now maybe we have, in 50 offers, we have 5 cash buyers instead of 4. So it gives them that leeway with the cash piece of it.
First time buyer that has 10% to put down.
Yep.
They're good for this cash.
Yep. So we can do FHA, VA, conventional, and also jumbo. So,
oh, wow. Okay.
Yeah, and that's huge, because
so
anytime we
since you mentioned jumbo, what are the jumbo is a term for if you're buying a really expensive house and you need a really big loan, right?
Right. Yeah.
So what is the floor on jumbo loans?
Once you hit 648, let's say, then you're in that jumbo market.
Okay. So in jumbo market, and this has nothing to do with what we're talking about, but I just want to understand it.
It does, though. This is part of the cash program.
It is. That's right. Okay. So thanks for reining me in. This sounds too good to be true.
It's not free. Okay. So there is a one-time fee, is that the buyer has to put in 3% earnest money. Oh. So New American Funding is not going to give you their cash for free. They are going to charge 1.5% of the purchase price. There's a one-time fee, and it can be financed. Oh, so that 1.5%, that's important to know, because, and so whenever I talk about this program, like you said, it sounds too good to be true. And so that's where I need to let our clients know what those fees are, so that they understand what the additional costs may be if they want to go this cash route. And
so
again,
they can roll that. So when, say we do this cash offer, And they're like, okay, that's cool. I'll pay that fee because it's definitely going to get me a house now, or like more likely to get me a house.
Yep.
Then you could go to we said they may not actually do it. Like, are they actually going to execute the contract with this money? Or you're saying like, so they're going to purchase the house with this money.
Yep.
And then they'll refinance, or what?
So what happens is, let's say that we do a cash offer. The purchase agreement is written that way, and we show proof of funds, because anytime that there's a cash buyer, they have to show proof of funds. So we show proof of funds. Contract is written as a cash buyer. Once that offer is accepted, then we're going to go ahead and we're going to start processing them as a cash buyer. At the same time, we're also going to be processing them as a financed buyer, because now we have a contract in place. So in the case where, let's say somebody has a home that they're selling, that full intention is going to be, we're closing with cash. Maybe we close in 2 weeks. Maybe the seller needs us to close in 45 days, whatever. We're going to close with cash. Once they sell their home, we then take them from a cash buyer and essentially finance that money. So we get our cash back and we finance that money on, the conventional, the VA, whatever the loan type was.
So it would be like a traditional conventional mortgage at that point too.
And
they're going to use the new home as the collateral, right?
Yep, exactly. Okay. I think that the buyer accept program, BAP, because we love acronyms, I think it's a great option to have available. If we are putting offers in and we're just not getting accepted. I mean,
so the 10% down payment.
Yep, 10% down payment.
And then 3% earnest money, and knowing that you're going to have to pay a 1.5% fee for the use of the cash.
Yep, exactly.
So generally, this is a great option, but it is an option for people that are a little bit more secure, like have a little bit of cushion financially anyway. So it's not really a fix for people that are struggling.
No, we have other options for those folks.
Do we?
Yes, we do. Girl, I'm all about the mortgage business. We got options.
So how is this, like the turnaround is pretty normal, like as far as qualifying for it and everything?
That's a great question. It depends on how long they take. And then for me, typically same day, we're going to have a pre-approval. On the buyer accept, I would say maybe 2 days, if that. Okay. They run pretty quick, within 24 hours.
So they need to decide that early in the week so that we're ready for the weekend.
Yeah, exactly. Exactly right. Well, and the thing is that we also, so our team that's working on the cash program, they're available for us in the evenings and weekends as well. So we're here whenever people are actually out shopping. That doesn't stop, because we need to make sure that they're able to present their offers. So.
Yes.
Yeah.
So important.
Yeah.
Okay,
so
Tonya.
I think if you have any questions, about the buyer accept program and cash offers and how that can help, reach out to me.
I'm going to put Tonya's information down in the video description. And also, Tonya, you said you were going to give me maybe a summary download sheet that I can supply to people?
Yes, I'll send you something so that you can, I don't know if you can share it on your video or just attach it.
I'll put a link to that down in the description, and I'm going to put it out on my Google Drive, and then they can just download it that way.
Perfect. That sounds good. All right. Well, good. Have a great day. Thanks for having me.
Tonya, thank you so much. I really appreciate it.
Yeah.